JP Morgan came out with a 74-page report on blockchain, digital currency, cryptocurrency. Very interesting. I have less confidence in JP Morgan after reading this. I've been excited that there have been talks of JP Morgan buying or merging with Consensus. These are all rumors. That makes me think JP Morgan gets it. But then I read this report and I'm a little concerned. I'm going to go through it here. I made some notes. We're going to start on page 6. There's something here. So I agree with what they say here about trade and finance and payments. Probably will, we won't really see a lot there for 3 to 5 years. Looking at Stellar, I feel like Stellar has been that's their focus from the beginning, trade and finance, payments, and it does look 3 years away, so I think they're right with that. They, however, talk here about one of the technical challenges being cross-platform integration. And they don't mention, this year in 2020, we're going to see Bitcoin on Ethereum with multiple implementations. We're going to see Zcash on Ethereum. Again, multiple implementations. We're seeing DAI. I think it's already launched on other platforms. Stable coin, dollar peg token, DAI. Binance. Anyways, there's, they didn't mention any of those things, which I think is curious to me. Anyways. Quantum computing raises security risks. I also don't agree with this. Well, never mind what I think. You can read what Vitalik Buterin says about quantum computing. It's so far away. And even if it's coming, there are plans on how to deal with it. And we'll see it coming from a long way. Vitalik's not worried about it. So I'm okay. I'm not worried about it either. JP Morgan is, but I don't know why. They did talk about it. You can read it. Let's see, that was page 6. Page 7. Cryptocurrencies here at the bottom continue to have a limited role in portfolio diversification or as a hedge instrument. I thought this was interesting for 2 reasons. First of all, I agree that I would not buy digital assets as a hedge. I think you need to look at these assets as the way you would have looked at Google pre-ICO, Amazon in 2002, as super fast growing on the next platform, but we're early, that sort of thing, which is not a hedge. It is a diversification. I don't know why. That would be, right, if you have part of your portfolio, instead of owning Google now, you own Ethereum. I think that's a diversification. I don't know why they say it's not. Okay, page 8. Here, what is my note for you here? At the bottom, this here. Okay. Payments, trade, finance, and custodial services remain the clearest use case. Payments and trade, they just admitted that it's not for 3 years, so I don't know how that's the clearest use case, unless they're talking about in the future. But what are people using these for now? First of all, Bitcoin as a non-custodial bearer asset that is a store of value, right? That has been a use case, continues to be. It's also true for Ethereum, I believe. But there's no mention of collateral being used in trading pools and in lending, saving and lending pools. That's a clear use case that's going on now, right? We're seeing MakerDAO locks up people lock up Ethereum and MakerDAO in order to create their borrowing DAI. It's a lending pool. I'm not going to try to explain MakerDAO here. And we see compound finance where they have two pools that are traded. A Uniswap. These are things that are happening now, growing really fast. I think these are clearly use cases. I don't know. This is why I start to think JP Morgan doesn't know what's going on, because if they thought it was nothing, it at least deserves a mention, like they think it's going to peter out. The fact that they don't mention these things as use cases means that they don't even see it. And even here, decentralized, where's DAI and why are these decentralized? Right? True USD. And USD coin is not decentralized dollar peg token. DAI is the only one that is decentralized. So, again, I'm not sure they understand what's going on here. So that was page 8. Page 9. This, move me a little. A supply chain buzz has faded. And automation gaining momentum as a way to improve efficiencies. This blockchain in the supply chain is sort of fading. You know, at the beginning, I was somewhat optimistic about this idea. And then I started to have my doubts, but still I wait for the results and wait to see if there's adoption. It's starting to feel like that, you know, these platforms, which include a blockchain, decentralized blockchains at least, have a great use case in the financial industry. Tons of things they can do. As far as extending it beyond that, a lot of the use cases I see, but we're talking a lot of them are 5 years plus. Maybe supply chain someday, but it doesn't look like it's today. So I agree with their assessment here about that. Page 10. Oh, this is interesting. So there's authorities introduced a temporary imposition on holdings and same-day withdrawals, which were lifted in April 2019. Okay, they're talking about in China, everybody moved to spending money on their phone, and this caused, there was some sort of disruptions. They went on a lot about it. I didn't want to dig in too much of what problems the fiat banking system has. That's not my area of focus. Anyways, there were a lot of issues between money markets and investments and balances when everybody suddenly moved on the phones. So China imposed restrictions so that that was, you know, this imposition on holdings and same way withdrawals. What is interesting is they removed it in April 2019, which is when the Bitcoin bull started running. And also a lot of people piled into that stupid plus token Ponzi scheme in China. Now, maybe it was a coincidence that, you know, but then again, what is the coincidence? Liquidity was increased for a bunch of people in that date. And some of it went to Bitcoin, right? The only way the price could go up is with liquidity. So I think the two are related. I haven't heard anybody talk about that, but, you know, interesting. Fun fact. Next, here, I forgot to look at this page. Notes, hold on. Where are we? Page 10. Yes. Another thing... very energy intensive. JP Morgan several times mentions blockchains being very energy intensive. I don't know why they don't just say proof of work is energy intensive, because that's what they're talking about. But that ties into what I think is interesting here is that there's no mention of proof of stake. Is it, again, if they think proof of stake is not going to happen, then mention that, right? I mean, Ethereum is moving to proof of stake. Now, even if you think, well, it's going to take much longer than people expect, and therefore we're not worried about it, still worth a mention. But I believe that we're going to see some proof of stake. We're going to see evidence and become more convinced. Most people become more convinced that it's happening in 2020. You know, even if it's 1 or 2 years, Ethereum moving to proof of stake, which is much less energy intensive. If that's happening even within 2 years, it's a big deal. So I think they're either unaware of proof of stake, which seems impossible to me, or, well, they're probably not intentionally hiding it. I don't know. Why don't they talk about proof of stake? Again, this is what concerns me with JP Morgan, understanding what's going on. But on the other hand, supposedly they're going to merge with consensus, and I guarantee that whoever works with consensus knows about proof of stake and that it's coming, right? So maybe there were 2 departments in JP Morgan, right? One group knows what's going on. The other one's not quite up with it. I don't know. And to people who research this, I don't mean anything. You guys are way smarter than, and I'm sure there's a million things that I missed in this and that I'm wrong about. It's just, whatever. I'm sorry if I'm an asshole. Okay, let's keep going. Page 11. Crypto companies. Okay, this thing about hedging. You know, well, one point on cryptocurrencies, I do not believe are a hedge investment, as I said earlier in the video. I think if risk is off, people are going to get out of these. Or liquidity will reduce. I don't think it'll ruin the thesis. Everything will continue moving forward, but just in the interim, people would pull out when there is risk off. However, one thing to note is imagine some, black swan event and the government closes all the banks for a day, for 2 days, for a week. It's happened before in history. This is one way that banks dilute you. They close everything, and then when they open it, prices are a little different, right? I think if all the banks were closed, because Bitcoin and Ethereum would still be running, when they reopen the banks, Ethereum and Bitcoin will be worth more than when they closed it. I believe that would happen. And then after that, people would start to look at Bitcoin and Ethereum as a hedge. Right now, it's just part of the liquidity game that the Fed loves playing. Okay, that was page 11. Page 12. Bitcoin solidified as platform of choice. What? I don't know. That's just funny to me. I don't, platform, first of all, anybody who has built on Bitcoin has failed. Like any other applications or decentralized applications. Now, there's a lot of, fiat to Bitcoin connections. But what platform? Who's building on? When I hear platform, I think that, that's where you're building things on top of. Who is even trying now? I mean, in Lightning Network, hey, maybe in 3 years, Lightning Network, maybe something comes out sooner, but it's moving very slowly. Not to mention, look at what's happening on Ethereum. How many, in Ethereum, what was I? Sorry, I looked at my notes and I lost my thought. As a platform, right? We have decentralized exchanges, which Bitcoin doesn't have, right? There's these lending and saving pools I mentioned, trading pools, new applications that there's privacy already running this Tornado Cash. You can make your coin private. There's so many applications being built on, being upgraded, successfully used on Ethereum. Yet JP Morgan says that Bitcoin is solidified as the platform of choice. I don't even know what they're talking about. I mean, yeah, they just sort of said it and they had one sentence here. Oh, other than ICOs. Hey, raising money, and thanks for mentioning it, actually. That's a good point. What's going on? There's new developments, and there was no mention of this either in the whole report. New ways of raising and distributing money, right? So, for example, raising money for a company, money is put into a fund. Some of it goes into Uniswap, so you have immediate liquidity. Investors can leave at any time from the beginning. Money is only released to the people working on it as they reach certain milestones. There's all this development being done, creating better ways to raise money. There's also, I think charities may be disrupted someday. A few big donors put in a lot of money, and then from the masses, people donate little bits, and there's a quadratic algorithm that distributes based on what people donated to. It's too hard to explain, but in this short video. But there's so much happening on Ethereum for them to say Bitcoin is the one. It's just, I don't know. Yeah, that's funny to me. Where were we? That was 12. Okay. Now pages. What is this? Oh, great. I don't know what that is. Some pop-up. I don't know if you saw it. Whatever. Okay. Page 15 to 20. They went, JP Morgan talked at length about all of these permissioned blockchain solutions that different banks are working on. You know, these are not decentralized. They are mostly projects from banks, and they talk about all of them. And I'm just very, you know, I think this is like the intranet. When the internet first came out and there was some good use cases, companies said, well, we don't want to be on the internet. We're going to use that same technology, but just within our own organization. And that intranets, most of you don't even know what it is, because that lost to the big open public systems. I think we'll see the same thing in this digital asset market. The decentralized platforms will have the most adoption. So a lot of these bank, financial service, permission chain experiments, I think most of them will fail. Maybe there'll be a small use case we find. And in a lot of cases, this feels like, you know, in my business, this is something that happens, and I'm sure it's in every company. It's like, we have this big problem. And so then people say, well, if we move to this new platform, this platform makes that problem go away. But what we always forget is now we introduced a whole new set of problems that might be even more expensive. And so this transition to new platforms is always, the costs are underestimated. And I think that a lot of these experiments are very optimistic, and it's not going to work out. So anyways, they talk a lot about these different things. Let me see what else I had. Okay. Oh, wait, I'm looking at the wrong notes. Sorry. Let's see. Was that page 18? No. Okay, let's see. Page 19. Okay, over here. So, you know, it sort of makes clear when you wonder, why do big companies get disrupted? You know, why can't they just do the thing that these small companies do? And this, I think, is an example of this. Again, if someone from JP Morgan or anyone who's really informed can point out why I'm wrong, I just want to know. You know, that's why I share these ideas out here. I didn't read this with an objective to like think JP Morgan's bad. In fact, I was hoping that I would love everything they have to say. But if I'm wrong here, correct me. I would love to. I just want to know what's happening. I'm not trying to pick winners. I mean, I'm trying to pick winners and losers based on the evidence. I'm not trying to create a narrative. So anyways, they show all of these examples of, what do they call these? I don't know. Let's just call them blockchain solutions or blockchain applications that are being worked on. And they mention all these, but they're only talking about applications created by banks for banks. You know, it's as if they think that nothing could possibly come from just two kids in their garage, right? You know, Uniswap, it could be a disruptive trading system, and it was written by a kid, you know, I don't know, in his bedroom. I don't know where he did it, but it was sort of one kid sort of did it. Oh no, the school's calling. Hold on, I gotta put you on hold. All right, all good from my kid's school. It was just a recorded message. Back to what we're talking about here. Why not mention what's happening with Kyber, Uniswap, MakerDAO, you know, and again, I didn't read this part too closely, so maybe there's a reason they only want to focus on this area. But again, to me, that's, whatever it is, it all helps understand why a large company can get distracted, because they're so in their little world, they're not seeing that that their real competitor is coming from left field. So then they talked a lot about this, so we skip all the way to 43. Right? No, wait, something on 20, I think. No, that was just more of the same. Let's get to 43 somewhere. Can I do this? 47, 44. I think this is it. Okay. All right. They did this little chart here talking about, the report then went on to talk at length about stable coins. But one thing that was interesting is very little mention of DAI, MakerDAO's DAI, the only decentralized cryptocurrency. They kind of mention it here, which is funny. They're talking about whether it's on-chain or off-chain. On-chain being a more trusted version. And they put here Maker. They can't even put the full name. MakerDAO, right, is the company that creates DAI. And then Steam is like, isn't that an abandoned stable coin at this point? And Huobi, I didn't even know they have one. Why no mention of Binance? And I never heard of Alchemint either. And Binance, why is Binance not here? I understand they're fast moving and their dollar peg token is kind of new, but it's growing fast and it's Binance, baby. It's my boy CZ. I wouldn't discount him. No mention of that here. So again, I don't think they're probably not trying to hide things. So again, this just makes me think they don't really understand what's happening, at least in the disruptive and decentralized part of the digital asset ecosystem. Okay, and then so I guess from 43 to 50, they talk at length about stable coins. I prefer calling them dollar peg tokens, but whatever. And they talk a lot about the problems that fiat reserve stable coins will have, and most of the problems seem to be just issues regarding the nature of dealing with fiat when you're crypto. Now, I'm not a banker. My expertise is digital assets, so maybe I'm being a little confused here, but it sounds like I would say, well, if they were talking about DAI, a lot of the problems they point out might be a problem for Coinbase's USDC coin, but not a problem for DAI because DAI doesn't have to touch fiat, right? Again, they didn't really talk about this, so maybe I'm wrong. I mean, maybe DAI would have some of the similar problems they're talking about regarding stable coins, but I don't think so. Okay. And then page 53. And we're almost done, guys. Thanks for hanging in there. 51, 52, 53. What's on 53? Oh. Yeah, no, that was the same thing. Okay. Sorry. Oh, 51. Why did I say 53? Oh, because it is 53. Sorry. Here we are. Okay, got it. Oh, here we are. So this here, they talk about, again, they love to say, well, where is it? Energy intensive instead of proof of work. Computationally expensive. Just call it proof of work. And we know, well, but on the other hand, some people may not know that proof of work is very energy intensive. Ethereum is moving to proof of stake, not just because we care about the environment, but because it is a better system. That's a whole nother story. And someday we will learn that Ethereum's monetary policy is better than Bitcoin's, both regarding security and issuance rate and energy usage. Energy usage by a long shot. Another thing that they don't mention here, I mean, I guess they're talking mostly about energy, but it should be noted that there's this working live on Ethereum now is optimistic rollup and ZK rollup. These are two scaling solutions up and running now that allow instant settlement, some privacy in some cases, and like, I don't know the exact number, but hundreds of transactions per second. And there are things coming. Ethereum's network, within 3 years, will be able to do more, or applications on the Ethereum network will be able to do more transactions per second than Ethereum at a lower energy cost. That's my prediction. 3 years is that would be hopeful. By 5 years for sure. I don't know. That's silly. Anyways, again, they should have mentioned that Ethereum has scaling solutions that are up and running now, and we're getting there. Like, maybe I'm more optimistic, but again, it's worth a mention. Ethereum's scaling solutions. So, anyways, listen, I was optimistic about, let's see, JP Morgan consensus. There were these rumors. So, just so you understand that Consensus is leading one of the largest organizations that do development for Ethereum. They have a great dedication to radical decentralization. To me, the big number, one of the biggest numbers, is the derivatives market, right? They say it's $1 quadrillion big. And I also understand that JP Morgan is a leader in derivatives. And with my understanding of what derivatives are, it appears that they will be better run, and I'm about to sneeze. I don't have coronavirus, and you can't catch it through the video. I wonder if that helps with my presentation. And I totally forgot what I was saying. So the derivatives market, so if a derivative is collateral held to back some sort of an instrument, and this is based on a set of rules regarding liquidation of the collateral and what this derivative is and does, and how it's closed out, all of that is better run on Ethereum. You can see the collateral in real time, these programs you can trust, and from JP Morgan's perspective, they may see the two as equal, right? They don't mind if JP Morgan is in charge of the company and they work there. But for customers not having to trust anybody, not that I have a reason to distrust JP Morgan, but I do have a reason to just like that I don't have to trust Ethereum. So to me, that's the big number, and I think the derivatives business will be disrupted by Ethereum. And thoughts of JP Morgan merging with Consensus makes me think JP Morgan's got it, they understand. And in fact, that's why they're talking to Consensus. But these are all rumors. And then I read the 74-page report on blockchain, and I'm not so sure where JP Morgan's going. So, let me know your thoughts, and thanks for watching.